Good to have you on board. Thanks much for joining in. To begin with, let's talk about the numbers, which has been fairly good in terms of your 13% growth in GWP, the increased penetration that we've seen in protection. What has really aided the quarterly performance?
I think what has aided the quarterly performance is really a great effort on balancing the product mix. We worked very hard because we were up against a very large base of last year. Last year, same quarter, we had grown about 47%. So we knew that rather than focusing on new sales per se, we should also focus on rebalancing the product mix, which is what we did in the final quarter. As a result of that, the margins for the final quarter turned out to be a whopping 31%, the highest we have touched so far. And as a result of that, the full year margins were all-time high of 27.4, and our VNB hence grew by 27% in that quarter. So really last year, there were a lot of push and pulls, things changing, 2 waves of COVID, and we tried to balance all the outcomes, as a result of which I'm very satisfied with the outcome that we finally ended up with.
Has that COVID one-time, one-offs and changes which had happened because of disruption, is that behind, Max?
Yeah, largely behind, I think almost behind. One of the biggest levers of measures of seeing that is how the claims behaving, and the claims numbers have come down drastically, very close to how it was pre-COVID levels. I think all the things that we had to do in terms of honoring the claims, receiving the claims, the reserve, everything has kind of gone through the financials and the operations, and we are now not witnessing any adversities on account of COVID. Again, fingers crossed, hopefully it remains that way.
Some of your peers tell me that needs to go higher because your underwriters are saying that, look, because of COVID, the entire underwriting premium needs to change. Where has that settled? I haven't spoken to you in a while, so I haven't got an update. But when I speak to your peers, they've told me that, look, it's been a challenge for them.
That's correct. And some bit of that has gone through. If you really look at, the large effect of not COVID, but the experiences have witnessed a southward trajectory, because of which things have gone through the pricing. As you know, most of the companies, including us, have increased our protection prices. That's where the impact was highest, to the extent of about 10 to 30%. For us, we have increased our prices too, between 10 to 15%, and we are watching it. It's a business where we have a process of looking at all our experiences on a quarterly basis, and as and when we witness any adversities or any deterioration in the overall experience, we take corrective actions. And the first part of the corrective action is looking at the norms, the underwriting criteria, as well as looking at pricing. And we have done all that. So I can say with confidence that all the changes which were required to be made have been made, and we will continue to watch this.
You made changes, and I believe you're also looking at ESG as a strategy. But before I get into that, just taking forward and what Nikunj was also talking about, while you have looked at it all, but just the way inflation is going up, will you need to reconsider your pricing?
Not the pricing. The good part is when inflation goes up, along with that, the interest rates also tend to go up. And interest rates going up actually is not such a bad news for life insurance as an industry, because we are in a large part of our business is also around savings. So, what we typically do is look at the proposition for the customer, revise rates or IRRs for the customer, which is what we're busy doing. And hopefully all that will be able to neutralize. My experience of last many years is life insurance as a product is a very robust product, which means it has product offerings for customers for different economic scenario. If the interest rate goes up, you can focus on certain elements. If interest rate goes down and the economy is on boom and the stock market does well, then there are other kind of products. So really the robustness of the industry definitely will be leveraged by the industry. And hopefully we will be able to maintain the growth trajectory that the industry has seen over the last few years.
Okay, we are of course also seeing all of you private insurers hike the long-term premium plans that had started to happen in the second half of last year. Now, Mr.
That's
Tripathi, we're also talking at a time when you're finishing a 12-year-long relationship with Axis Bank. Axis is now, of course, a co-promoter. It has become a co-promoter. So as you enter your 13th year, and with Axis becoming a co-promoter, tell us what are the plans? I believe there are going to be changes in distribution as well, more synergies that will be at play.
One of the best things that could happen to Max Life Insurance was this change, which we all work towards. And I'm so grateful to the management team of Axis Bank that they chose to become our co-promoter. We immensely feel proud about this particular development. Ever since they came on board, it is a full integration. So a large part of their leadership sits in our board, participates in creation of strategy, help us with our own plans. And that is really aiding the performance of Max Life Insurance. I'm very hopeful over the next few years, this relationship will definitely work in favor of Max Life Insurance to make it and position it as one of the strongest life insurance players. As the relationship evolves, we are looking at several elements of advantages that we could derive out of this relationship, starting from distribution. There are pieces of work that we've done, looking at different verticals and how do we penetrate more through those verticals. Product and product mix is the second element. For example, there are elements of protection annuities where we are working very hard with the bank to make sure that it provides good momentum to Max Life Insurance. There are synergies that we are looking at across cost-saving initiatives, procurement, people, movement, etc. So we are just trying to increase the level of synergies across different verticals. And I'm sure as quarters pass by, the benefit of that will start to show up in the performance of Max Life Insurance.
Thank you so much for taking time out and joining in and sharing with us the key growth levers for the company.